Folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, June 19th, 2008. Well, let's get right into business here, guys, because today was a phenomenal day. There was so much going on. Oil issues going on out there where oil was up early, then reversed, and ended up having a dramatic drop. And then again, just like we talk about the oil trade, oil rules the market. If you want to trade the SPY, the S&P, the Dow, all you do is look at the USO. You go opposite the USO, and generally that's the way the market's going to head. And it was to a T today, as we saw. And we're going to talk about that today. We're going to talk about the 1329 marker that we had called. We're going to talk about that time factor, which was a time turn date in the markets that we saw over yesterday to today to tomorrow happening. And it may have started today. And we're going to talk about all this as we get into it. And it's just so much we're going to try and just go through as much as we can today in this video. So let's first start out with that 1329 marker, guys. You all know what we talked about with 1329 yesterday. Once we had that pullback, we thought we saw a turn date based on time. Now, we focus in on price pattern and time. Those three factors are the keys that we follow in this market through our proprietary analysis and through our normal technical analysis techniques. Now, we had seen a turn date coming up, and we had thought it may have been yesterday, but it looks like it came to fruition possibly today. Based on that, however, we're still not going to talk about a possible bounce scenario until after Options X, and that's a conservative nature of us. All right, we're conservative on that side, and we know how crazy Options X is, and tomorrow is Options Expiration Friday. So until we get through tomorrow, it could be whippy. But nonetheless, today was a good start in what we saw. And you guys know that have been following us. We saw this turn date coming up that was possibly a signal for a bounce in the markets. All right, we're not going to go any further than saying a bounce at this time because we're going to reevaluate. But we see some things on the horizon of unique nature that could lead us to tell you guys some more insight into where this market could go on this bounce. And again, I'm using the quotes with my fingers when I talk about bounces. We're going to go into more depth on what that could be. All right, folks, so what were the keys today? The oil reversal. USO got crushed today, oil got nailed today, and natural gas took a hit today, and we saw that tumble. We're going to go through the charts today, unveil what we're thinking out there, and talk a little bit about the oil trade in relation to the markets, the turn date based on time, and all these other factors. So let's get right into the ES here and the intraday movement. And what you're going to basically see, I'm going to show you the USO chart, and from that we're going to talk a little bit about it. All right. So number one, what I want to talk about first is the S&P. Now, you guys know yesterday we had talked about the S&P and that key level, and we talked about how it would make us comfortable if we could touch that 1329-ish level of support before talking about a rally. Well, early on with oil not down that much or barely down at all, and we'll flip to the USO chart on the intraday. Here's where oil started, and pre-market it was trading up here. It was around $11 to $111 to $112. Early pre-market. I think it even might have gotten to 112. And this was all pre-market. And early on, the futures are down a little bit. And initially, the futures start out down as oil opens up here flat on the day, and then we start the selling. So now let's talk a little bit about that level on the SPY. What happened? Number one, I'm going to bring in a chart here, or a little thing on the S&P. This is the S&P 500, and let's look at the low of the day. All right, 1330, low of the day. That's right on top of our 1329 level that was so key when we're talking about it. And while it didn't tick to 1329, we can also look at that as a possible in-spirit of bounce off that support level. As long as you get down there, whether it's within a point or so, which is where we got, that's when what you want to see. So again, note that level. We came down early to test that level, and then before you knew it, the market was off to the races on the NASDAQ especially. And there was a disparity here. All right, again, oil was down almost $5 today, which was a big contributor. And as soon as you saw this market tick down like this, you basically saw the markets begin to get a bid. Now, notice the sell-off at first, then the bounce. This is opposite of how the ES futures look. All right, so you can see early on, here the market's opening, and you had that initial sell-off in oil, which was this pop, and then you had the bounce in oil. And you can see the markets began to drift lower. And look at this nice little W pattern we got here. Nice little W with a double bottom. And all you guys that follow these videos know how key that double bottom is. Then you got a nice rally up. You got the V pattern and off to the races to the highs. Notice the topping tail there, signaling the sell-off coming, and down you came a little bit into the close. We did sell off a little into the close, and I think that was partially financials. Financials did catch a bid later in the day, but they weren't that strong. Really what we saw today was the oil trade working to a T, and that was purely seen in the NASDAQ. And the NASDAQ was up 32 points today. All right. On the other side, you only saw the Dow up 34 points and the S&P up 5. And that's a direct relation of the XLF and the financials being weak. The XLF was only up about 21 cents, and you can see, except late in the day, we got a rally in that. But up until that point, you really saw a negative XLF for most of the day, and it only closed up 21 cents. And that was holding the Dow and the S&P back because a lot of these financials are big components of those indexes. But the NASDAQ really was the key here, guys. Here's the NASDAQ chart, and you can just see off to the races here on the intraday NASDAQ chart with the NASDAQ closing up 32 points. And that's because you had the oil trade working to a T in the NASDAQ. All right, there were no financials in the NASDAQ to really bother it, and basically it was inverse to the USO, and the USO was down huge today, and obviously, in turn, the technology was able to rally quite nicely. Now, should financials really participate, and we saw some great gains in the transports and stuff today. They were extremely strong. Whenever they're strong, you're going to definitely see a positive market, most likely. It also helps when the financials are strong. So we have to keep watch this. Should oil come down and test that level, continue to fall, test the 130 level, break 130, go into the 120s, and possibly break 120, and the financials get a bid, and by the way, the XLF's at a triple bottom. There's so much technical stuff out there right now. I can't cover it all in this video. I should really be shooting a 20-minute video, but what can you do? We'll do our best we can. So, obviously, you see the NASDAQ had a great day. Now, let's just quickly look at the XLF. This is the key on the XLF, guys, and we pointed this out in the chat room, which you all should be in, because it is an unbelievable benefit to every trader in there. Every trader in there contributes. Every trader in there we talk to, interact with, and so forth, and we trade. That's what we do. We're traders by nature. We swing trade, we day trade, we do it all. All right, now notice the triple bottom. 1, 2, 3. Early on when this market was negative, we talked about the possibility of a breakdown here. We said if this closes below, that's not good. They saved it today, so we watch this over the next few days. Does this triple bottom hold in nature? Do we keep above this breakdown line? If we close down here, then that worries us a little bit, but we don't think it necessarily, at this point in time, we're going to have to deal with that. We should see a little bit more of a bounce in the XLF coming up. Now, in addition, let's talk about the USO, because this is where things get a little crazy and fun. The USO, and I can show you the chart, look at this drop today. I mean, as big a reversal as yesterday, we really came all the way down and went to the lows. And that's, by the way, the lows from yesterday are where we basically ended up today, and that was the support we held on. Now, I want to show you the 60-minute chart on this, all right? So I'm going to go right into the 60-minute because it's very, very unique in nature. Alrighty, here we have the 60-minute chart, guys, and I want to show you something key. Remember the 108 level from yesterday we had talked about as being key, and how we couldn't really break it, and they rallied it towards the end of the day? Well, let's draw that in right around that 108 level, alright? And we can draw that in right around here. Here's the 108 level. So you had us bouncing about it. We gently went below it early, but they were able to close us back above. Off we ran into the close. This is yesterday. Now today, look at the key here. We came down, we finally broke it. Now what was the next level we went to, guys? And this is the beauty of this. Look at it, we'll just draw a straight line right over here. Right to the next support line on it, which also happens to be a gap fill area. So here's the line of support. You have a hit here. You also drag this over this far, right over to here, and look at what you have. Gap fill support as well. So this is why these levels and reading charts are so key to understanding, because if you're a trader, and it breaks 108, then you know the next level it's going to, where it's going to find support on the USO. Alright, you just look at the 60-minute chart, and we're a big fan of looking at various time frames. You get so much more information out of multiple time frames. On the 10-minute, you're not going to see all this. You're just not. It's too zooming in on a specific day to be able to view back. So you look at the 60-minute for more confirmation and more levels, and you're going to see that gap fill on the USO. Now the question is, does this hold tomorrow? And we're going to watch this. So it's at support. That doesn't mean it, it can't break. Absolutely not. We ultimately believe oil is going much lower than where it is. I mean, every bubble, everyone says it's a different bubble. In the tech bubble of 2000, oh, this is different. The internet's different. It's a new thing. It's going to go on forever. The housing bubble, oh, it's different. It's going to go on forever. Yeah, okay. Well, we all know what happened to that. Oil's same thing, in our opinion. All right. Everyone says it's different. There's demand. There's great. Long story short, ultimately technology takes over, people switch over, demand, economies get, slow down, demand gets less, and it'll find its way. So that's our point there. Now, it doesn't mean it can't go higher, but ultimately you will see a big drop. Oil's basically gone since 2001, from $25 to $100 and almost $40 high. There's a point where it has to retrace back to, get a Fibonacci retrace in there at some point. So whether or not that started today, we don't know. You have to see confirmation tomorrow, in oil. Even a pause day is fine as long as the next day of trading we see another drop in oil. All right, you often, after that big move, we talk about a pause possible, or maybe we just dump out. But you just don't want to see it retrace back up again and wipe out all of today's losses and go back up. That would be the wrong thing to see if we're going to see continued downside. All right, guys. Either way, phenomenal day today. Come join the chat room. Unbelievable in the chat room today. Couldn't be happier with the participation and the leadership of some of these traders that are now stepping up and calling out trades and so forth. Now, how do we play a possible drop in oil? All right, and nonetheless, oh, by the way, folks, just looking at the daily chart of the USO, you're at support here, as we mentioned. Not only was it gap fill from that one day, but you're also at support here. Now, you break this 20 moving average, you're going to watch for a move possibly to this gap fill, as you're right here at gap window support. All right, so not only are we at the 20 moving average here, but you're also at gap window support from this low here. All right, so keep that in mind, folks. Should we break that, then the next area of support would be this fill right at this point.